This market's been whooping my ass. Don't know any other way to say it, guys. Let's walk through my past 5 trades. 4 of them have been losers. And let me talk about how bad my execution has been. So if you guys want to follow along, pull up the ticker in the top left-hand corner, SDKT. And this yesterday, phenomenal runner in pre-market. Market cap is below 50 million. Free float is below 10 million. Volume on this thing is absolutely exceptional. $44 million worth of volume on this current 5-minute candle right here that I have my mouse over. And for me, if you guys have been watching my content, you know I'm waiting for a pullback, and then I'm waiting for a 5-minute candle to close above that breakout level. So this red candle right here allows me to establish the breakout level of 257. Going into market open, we get a 5-minute candle that closes above that level. This is my fucking bread and butter. I should be executing this perfectly. I've backtested over 3,900 of these. I know exactly what I need to look for to know if I have an edge in this and if we're more than likely going to get some continuation. And one of the things is you got to zoom into the 1-minute time frame, and you got to take a look at the final 1-minute candle of the 5-minute candle that confirmed the breakout, and then you got to take a look at the next 1-minute candle. So specifically for this setup, since the 5-minute candle closed at 9:30, the 9:30 candle on the 1-minute time frame and the 9:31 candle, both of those must close green. So let's zoom into the 1-minute time frame, and I'll show you exactly where I messed up on this trade. If you're a trader with over $10,000 in your account, you probably made some mistakes very similar, and it's not just costing you $10, $20, $30. It can cost you hundreds and thousands of dollars according to your position size. So at 9:30 a.m. right here, this first 1-minute candle closes green. I'm in go mode as soon as I see this, because now I know within the next 60 seconds, if this next 1-minute candle closes green, I'm in there like swimwear. I'm hitting the buy button. So at market open, what happens? This stock in the first minute of market open immediately gets halted. And right now it looks red, but in the moment, this thing was flipping red to green, red to green, red to green. And the reason why I was doing that is because the open and close on this stock was both 261. So it opened at 261, but it also closed at 261. So I don't know why Webull did this. I wish they would have just picked the color, but it kept switching the candle from red to green because the open and close was identical. So in that scenario, I have to make a decision. Should I take this trade or should I not take this trade? I ended up obviously making the decision to take the trade. And the reason why is because we were going into market open. There wasn't much else to look at. And I wanted to catch a trade. And I knew that this was either going to be a big 15% winner, or it had the possibility to be a big 30% winner, because I could possibly take 2 trades on it if it did get continuation. But should I have taken this trade going back? Knowing that the market has been choppy over the past couple of weeks, I should have taken that into consideration. But more than anything, you know, with the next 1-minute candle closing green, like what's the universal law that this strategy is more than likely probably telling me is that after a breakout is confirmed on a smaller time frame, you are looking for obvious continuation. And the question is, did we get obvious continuation on this next candle? No. If anything, it was indecisive, and then it got halted before we could even make a final decision. So I ended up entering this trade right after it got unhalted. Right here, got filled at 269, and obviously took a poo on me. Lost well over 20% on this trade when I should have only lost 20%. Had bad execution on that one as well. But looking back at it, moving forward, what am I going to do differently? Is that for the rule, not only do I need to say that the candle needs to close green, but the close needs to be higher than the open. The close cannot be identical as the open. This is the first time I've ever seen this happen on a breakout, and it's unfortunate. But moving forward, that is going to be the law. That is going to be the rule, because what we want to see is obvious continuation here. And we did not get obvious continuation, so I should have skipped out on this trade, but unfortunately, I took the trade. Now, the next ticker that I ended up trading that exact same day, which was yesterday, August the 10th, was XHLD, and I took 2 trades on XHLD. So it made this high in after hours yesterday, pulled back most of pre-market, and then right here at market open, it ends up breaking above my breakout level right here at 950. And the small cap market, after market open, almost everything has been getting halted to the upside, and XHLD was no exception. 5-minute candle closes above 360 right here, and it gets halted as it's closing, but I count that as a candle close. Now, the free float on this one is between 10 to 50 million. So one big thing that I'm looking for me to possibly trade this is the volume on this 5-minute candle more than $1 million? And roughly on this 5-minute candle was at 3.59 million right before it got halted. So I have more than enough volume for me to trade this one as what I call a quickie setup. And a quickie setup has around an 88% win rate to go for 5%. So the plan was, as soon as it got unhalted, to enter this trade as soon as it opened. That's exactly what I did. I went for my 5%. This pops all the way up to 469. It hits my take profit. Cleanest trade that I had all day. Quick little 5% winner. But keep in mind, I just took a trade on SEKT where I lost over 30% when I should have only lost 20%. And at this point in the trading day, I'm wanting to make this money back. No matter how long you've been day trading, you always have that gut feeling where you want to make your money back if you start the day off red. And typically, if you start the day off red, it can also lead to some of the biggest losing days if you don't know how to control it. So I ended up taking the second trade on XHLD. Another strategy that I like to use is if we get obvious continuation after the breakout is confirmed, meaning the next 5-minute candle closes green, one of the things that I look for, one of the things that I track is at what point is it profitable to take this on a pullback? So what I found by tracking over 3,900 plus breakouts is if a stock makes a move that is at least 20 to 30% and then pulls back to the original confirmation level, then at that point, it is profitable for you to enter. So if I just measure from this quote unquote 5-minute candle close up to this 469 level, and this is what I did in the moment, you can see that's 24.7%. which falls right between that 20 to 30% range that I want. So I ended up hitting the buy button right here at 376. So I ended up entering this stock at 376 for a 15% stop loss, 15% take profit. Now, what did I do wrong here? What I did wrong is I count this as a close, but you can't get in on a halt. So the true place where you can get in at the entry is down here. And I always track that from the entry. So it should be 20 to 30% from the entry. The entry was not here at this candle close because it got halted. The open of this next candle, which was down here, that's where I should have measured the 20 to 30% from. And if we do that, so I come all the way down here to the rectangle and measure that, you'll see that that's over 30%. That's 34%. And once you get over 30%, it's no longer profitable to take those pullbacks. So again, wrong measurement in the moment, wanting to make my money back, letting emotions come over. I answer right here. And sure enough, this thing just barely wicks me out right before this bounce right here. Would have gotten close to my take profit right there. But either way, I ended up taking a 15% loss on XHLD when in reality, if I would have just taken the time, take a time to breathe. All right, Andrew, we started off with a loser. Okay, we got halted here. We opened here. Measure from the open. Don't measure from the close. I would have seen that was a 34% move. Okay, we're not taking that trade. So for yesterday, 2 out of the 3 trades that I took yesterday, I should have never taken. The only trade that I should have taken was the breakout on XHLD where I went for a quick 5%. So instead of having a small green day of 5%, which would have been fine, that compounds over time, trading is a marathon, not a sprint, I ended up losing well over 45% between both of those positions. So yesterday was a horrible trading day. And then let's get into the actual trade that I took today. So today I took 2 trades. Started off today with GLE. If you guys want to follow along today's August the 11th. So GLE, again, everything that I'm looking for. We come over here to the quotes, take a look at the market cap below 10 million. Free float is between 10 to 50 million. So I know I can go for a quick 5% on this one after it breaks out. So same exact setup here. We get the 5-minute candle that pops up here at 905. We get the first pullback here that allows me to establish this breakout level of 71 cents. And then a 5-minute candle closes above that. Now I just got to identify, does that 5-minute candle have at least $1 million in volume? And it does. It's got $6.35 million worth of volume with this custom dollar volume indicator that I created. Well over $1 million. So I answer right at the close of this candle, and I should be going for a quick 5%. Now, where I messed up is in this moment, I decided to put a sell limit order right like at 0.816 something. I think it was like 0.82, 0.816. Now, what I should have done in the moment is just measured out exactly 5%. Because while I'm very precise, like if it hits 5%, then I count it as you could have taken profit, right? And this stock goes up all the way to 0.8150, which is 5.1%. My take profit was at 5.2%. So it barely missed my take profit on this wick up to 8.815. But in reality, this stock did move for 5%. And I should have, number one, put my sell limit order just a little bit lower, be a bit more conservative. Andrew, why not go for 4.9%, 4.85%? It's a very minimal difference. Like, let's go ahead and lock the winner in. Because you know if it hits 5%, that's counted as a winner inside of your dashboard. So 2 things should have happened. Number one is I would have got filled on that because we had more than enough volume. We had millions of dollars flowing through each 5-minute candle. I would have got filled on that if I would have put it at 4.9%. Or worst case scenario, if my order wouldn't have got filled, then in that moment, I should have measured out that little pop and saw that it went for 5% there. And then what should I have done? I should have immediately exited out of that position if it didn't fill my order, because at that point, it's already hit my 5% quote unquote, take profit, and the dashboard is going down as a winner, but I'm still in the trade, which means I need to get out of that trade, which means I would have exited probably somewhere around here for a quick little 4 or 5% loss, something that would have been way more manageable. So 2 things I messed up. Number one, I didn't have my take profit right at 5%. If I would have gotten filled on that order. And then after it went up a little over 5%, I continued to hold and ended up losing 15% on this trade. So again, I messed up on GLE. Why did I mess up on GLE? Because yesterday, Monday, was a red day, and I was trying to bounce back from that red day. And instead of just being conservative and getting the 4.9%, I want the full 5 point something percent. When in reality, I should have just went for the 4.9%. Okay. Now, the next stock that I took today, I had no business taking this trade whatsoever. This stock didn't even go to breakout. It was ticker FRTT. Now, one of the things that I'm tracking is how long it takes for a stock to bottom out after it's created a breakout level. And I started tracking this around 2 weeks ago. And I don't have definitive data on this yet, but what I'm noticing is that most of these stocks are breaking out within the next couple hours. But more than anything, most of these stocks are bottoming out within the first hour after they've established a breakout level. So it establishes the breakout level right here. And then within the next hour, it makes this low right here. I'm thinking to myself, as it's going into market open, it starts to bounce right here. And as it starts to bounce, I'm like, I could probably get into this position right here, put my stop loss down here at this previous low, and then possibly try to ride this one back up to the breakout level, which would have been a massive win for me. It would have been over 55%. And then if it breaks out as a green light special, I can go for an additional 15% and possibly catch over 70% on this trade. But why am I thinking this in the moment? Because yesterday I took 2 trades that I had no business taking. And then in the morning on my very first trade, what should have been a small winner ended up being a full 15% loser. So now at this point in the day, I'm looking for how I can make my money back over the past 2 trading days. Decided to end up taking this trade right here. My stop loss ended up being like close to 16% right here down at this bottom level. This stock tries to break above VWAP and hold below above it, and then ends up getting rejected right here. Ends up hitting stop loss down here for a full 15% loss. So out of the past 5 trades, 4 of them have been a loser. And this one I had no business taking. And 2 from yesterday, I had no business taking. So in reality, if you think about this, the only trade I should have taken yesterday was XHLD for a quick 5% gain. And the only trade that I should have taken today was GLE. And if I would have had my take profit at 4.99%, my order would have gotten filled. And instead of the past 2 trading days being red, I would have had 2 green trading days instead. And that has cost me thousands of dollars in potential profit. And that's how bad execution can mess up. So what am I going to do moving forward for the rest of the week? From moving forward, there's a couple things, and I'm going to remind all of my one-on-one students when we get in the live trading session. Number 1, being more conservative with the take profits. If in the dashboard tracker it says 15% is the best take profit, I'm putting my take profit at 14.9% to make sure I get filled. All right. And then on top of that as well, if we don't get clear continuation on the next 1 minute candle, if the opening closes is the exact same on the next 1 minute candle, I'm not entering those trades anymore like on SCKT. So hopefully you guys got a couple lessons from this video. Those were my losses over the past 2 trading days. If you guys are interested in one-on-one training with me, you want to see how I execute these trades in real time, all of the back tested data that I got, you can feel free to click the link down below, learn a little bit more, and I'll see you guys in the next video.